All right, welcome, family. Everybody a part of the mentorship. We definitely want to welcome you guys all here. Today we have a special call. We only do this call once a month, and it's truly special, especially during this season right now. So we are going to move into our business, finance, and tax call, and I'm going to be bringing up the one and only Raisha Lilly. She is the person that handles anything that has to do with money for myself and my businesses. She handles it. I've known Raisha for years. She like when it comes to numbers and money and just knowing her stuff, I've never seen anyone better. And I'm pretty sure there's a lot of people that's really good with stuff like this. I'm just talking about from my personal experience. She's very knowledgeable. She's worked for some of the top companies and I don't know if it was it a school or the hospital. Well, you work for was it Columbia, right?
Columbia University.
Columbia University. She's handled $1 million accounts. I'm pretty sure she'll tell you all this stuff, but she just knows her stuff, right? It's point blank. So she takes her time, especially during a busy season like this. It is tax season to do this call. So you guys hang on. I'm going to go ahead and introduce the one and only Miss Raisha Lilly. Raisha, I'm going to go ahead and let me pin you first, and then hold on. Let me replace. Can I replace pin? Replace pin. That's one. And then I'm gonna go ahead and give you host so you can control everything, basically, in case you want to share your screen or something.
Okay.
All right.
All right. First, I want to say Happy New Year, everyone. Congratulations to all of you who started businesses last year or made some strides in your business last year. I mean, that's the goal each year for us to do more and more and more to progress. Jarrell, thank you very much for the introduction. Like he said, we've known each other for several years. We are invested in businesses together. We do a lot of interacting and networking and just working together. So him and Yvonne both are a pleasure for me to work with. And I appreciate him giving the opportunity on this platform to talk to you guys. So I just want to take a few minutes and share with you guys what I bring to the table. I'm not feeling so good, so if you guys are having a hard time understanding me, just let me know. I'll do the best that I can to clear things up. And I'm not going to take up too much of your time. I'm going to do my best to have us all for here the next 30 to 45 minutes. So like Jarrell mentioned, I focus on finance. So I'm going to go through, I actually do want to share my screen. I have some slides I want to go through. Let's get this going. All right, can you guys see my screen over there? Yes, perfect. Okay, let me see what I got going on here. So enlarge my screen here a little bit. Here we go. All right. All right, so I am going to, let me get this. Something blocking my view. There we go, slideshow. All right, there I am. All right, so I'm actually going to go over a slideshow for, I know most of you guys are business owners. If you're not currently a business owner, you aspire to be. And so what I'm going to cover is actually going to help you along the way for this year, kind of set some things up properly at the beginning of the year, so we're not scrambling at the end of the year. If any of you guys are at the end of the year right now, and you have any questions about what you need in order to be prepared to file your tax returns, you guys can hit me up offline after this, and we can discuss that. If you don't already have a tax preparer and you're looking for one, I'm your girl. I've been doing this over 20 years, both individual and business, but I'm actually getting ready to go over a bunch of that. So bear with me just a second. Okay. All right, cool. So my company, again, as I mentioned, is More Money Matters. I'm going to talk to you about knowing your numbers. This is going to go over business entities as well as bookkeeping. So as you mentioned, my name is Raisha Lilly. This is an old slide because I'm actually 45 years old now. And I have two sons, 28 and 15. I have a granddaughter and a grandson, 5 years old and 3 years old. And I have a bachelor's degree in business management and a master's degree in finance. I worked at Columbia University for 11 and a half years as a financial analyst. I moved here to Charlotte in 2014. The finance company that I own, we primarily focus on tax preparation, bookkeeping, accounting, and payroll services. I now do a lot of financial literacy as well. So there's so many people that want to know more about business and finances and, different things about keeping their stuff in order. So I do a lot of those courses. So I have 20+ years of experience preparing tax returns. I started my business in 2003. I handle both individual and business returns. We opened our first office here in Charlotte in 2018. And the biggest thing for me in business and in this finance realm is the opportunity for me to work with individuals and small business owners. The reason this is super important to me is because I'm a first generation business owner in my family, and I made a lot of mistakes in the beginning because I didn't have anybody that could coach me and teach me, kind of show me the way in this entrepreneurial world. And there weren't a lot of affordable coaching businesses like they have out here now, such as Jarrell and many others. The reason why I do what I do and go so hard with what I do are these 4 people right here. So my 28-year-old son is an entertainer. He has music released on all platforms. My 15-year-old is now he's 6'3", and he plays basketball. And these are my 2 beautiful grandchildren. Now, a little bit about More Money Matters. I started this business in 2003 as a sole proprietor. So when I first started, I didn't know much about business entities or, the difference between any of them, why I have one versus the other. So I started as a sole proprietor. I started just preparing individual returns for family and friends. Now I was living in New York, in the projects, in the Bronx, and I actually worked in my living room. My business grew by word of mouth and referral. It still does to this day. I worked in my apartment in New York City while still a full-time employee at Columbia University, and I was also a full-time student. I incorporated my business in 2014 when I moved here to Charlotte, and I began to build an actual entity. Now, what do? We do individual tax returns, business tax returns, we do for sole proprietors, we do single member LLCs, partnerships, S corporations, as well as C corps. We do bookkeeping for small and intermediate businesses. We do new business startups. So if you're someone who doesn't quite have your business set up yet, we set businesses up from scratch. We teach tax preparation classes with agent and franchise opportunities. So what that means is I allow people to work with me as it's pretty much like a mentorship program if you're interested in building your own tax business. So you get to work under the More Money Matters umbrella and basically build your own tax business. And when you're prepared and ready, you can either go off and do your own thing, or we have a franchise opportunity where you can kind of franchise under More Money Matters, same as a McDonald's or Burger King. We teach bookkeeping classes with software training. And the new business pro class, this is where you'll walk away with your business completely set up, your EIN number, your state filings, your bookkeeping software, operational plan, your tax withholding ID numbers if you intend to pay yourself or pay others, your unemployment ID number, and your Dun and Bradstreet registration. Your Dun and Bradstreet registration basically is kind of like your credit report for your business. When you're applying for business credit, it's the Dun and Bradstreet information where these things are reported, and you actually have your business has a score. Types of entities. It's imperative to have your business set up in a way that best represents the product or service that you are offering. People have lots of questions about like, what's the proper entity to set up? It really is at your own discretion, but I do have my opinion. All of my business personally are S corps, and I'll explain why my businesses are S corps. First type of entity you can start is a sole proprietorship. This is when one individual or married couple in business alone. Okay, sole proprietors are the most common form of business structure. This type of business is simple to form and operate and may enjoy greater flexibility of management, fewer legal controls, and fewer taxes. However, the business owner is personally liable for all debts incurred in the business. So that's important because basically you are your business when you are a sole proprietor. It is not an entity separate from yourself. Next, you have the limited liability company. A limited liability company is formed by one or more individuals or entities through a special written agreement. This agreement details the organization of the LLC, including provisions for management, assignability of interest, and distribution of profits and losses. LLCs are permitted to engage in any lawful or profitable business or activity other than banking or insurance. So if you're going into any one of these industries, you cannot be an LLC. So an LLC is similar to that of like a pass-through entity, so it is a corporation. A single member LLC has to be filed on your personal tax return, so there is some level of personal liability on an LLC. It is exactly what it represents, limited liability. So depending on what industry you're in, God forbid, if there should ever be, some sort of situation, you only have a limited level of liability. You can still be held personally liable depending on what the limits are in your industry, in your circumstance. And then there are two types of corporations. We have a C Corp and an S Corp. A corporation is a more complex business structure. A corporation has certain rights, privileges, and liabilities beyond those of an individual. Doing business as a corporation may yield tax or financial benefits, but these can be offset by other considerations, such as increased licensing fees or decreased personal control. So you'll see more of the decreased personal control in a C Corp type situation. Corporations, well, you can see it in an S Corp too. Corporations may be formed for profit or nonprofit purposes. And this is the breakdown of the difference between an S Corp and a C Corporation. It's the way each entity gets taxed. So an S Corp is treated as a pass-through entity, where taxation passes through to the company's owners who report their share of profits and or losses directly on their personal income tax return. So what this means is that basically you're going to have a business tax return prepared that indicates what the company has made, what the company's expenses were, and whatever's left over in profit gets distributed to the shareholders. So if there are two people who own this business or are shareholders on this business, they're 50-50. Whatever those profits are split 50-50. And then when they file their personal tax return, they file that 50% of their earnings. Whereas with a C Corp, they are generally taxed separately. The corporation is taxed and the owners and shareholders are taxed when they are issued profits or loss. So this is when you hear people say things about double taxation. So if the company earned $100,000 and had $50,000 in expenses, basically that $50,000 is being taxed on the company side. And then when the shareholders split $25,000 each, they are taxed again on that same $25,000. So that's a perfect example of the double taxation situation. So I said I was going to explain to you guys why my businesses are S Corps. The reason I set my business up as S Corps is because I don't want the personal liability. So when you're an LLC or sole proprietor, if there, again, God forbid, if there should ever be a legal matter that should represent, they can sue for your business. But if your limited liability doesn't cover whatever this legal situation is, they can come after you and your personal assets for whatever the difference is. Whereas with an S Corp or C Corp, that is not the case. Any legal matters can only go against the entity itself and can only garnish against what the entity has and what the entity owns. So no one can ever put a lien on my house or any of my personal assets. They can only go after the entity. I want to talk a little bit about record keeping because this part is super important and it doesn't matter how your entity is set up. If you're a sole proprietor, an LLC, an S Corp, or a C Corp, this record keeping piece is super important. So allocating operating expenses and keeping clear and concise records. So I deal with a lot of businesses, right? And some of what I experience is small businesses or new businesses or startup businesses. We basically, and I started this way too, I lived off the money that I earned. But I never really had the opportunity to see what my growth opportunity was because I kind of made and spent as if me and the business was one. So it's important to create some level of budget and allocate what your operating expenses are. Keep those records clear and concise. What are you earning? What are you spending? I have spreadsheets that I'm happy to share. They are easy to roll into what you need at the end of the year, which is a profit and loss statement. It already has formulas and everything plugged in, so you can literally just plug your data into it and it'll do the necessary calculations for you so that you can kind of see where you are. It's important that you open a business bank account. Keep your stuff separate. I made this mistake years ago. I don't know how many of you have been around with us for several years, but we were involved in the network marketing business, War Ventures. And so because I didn't really, I guess, really see it as a separate situation, I didn't open up a separate business account for the funds that I was earning through that business. And I just was using like my personal account in certain things. But one year when I filed tax returns, even though I had all the receipts and the programs from the trainings and all this different stuff, it was the state of North Carolina, actually, not the federal, but state decided to audit me. And they did not, it had like an encyclopedia thick worth of evidence of all my stuff. And they decided not to recognize it simply because it was intertwined with my personal stuff. And their flaw in it was, well, we can't really tell if this is personal travel or business travel because it's incorporated with your personal things. And so they basically disallowed me a bunch of things that I was entitled to. And I ended up owing them about $7,000 that I had to pay them back because no matter how much evidence I gave, because it was mixed up, they made a decision. So ever since then, I absolutely have complete separate accounts. Like I do not use my personal account for business stuff and vice versa. I suggest you pay yourself a salary. This is the other important part. All the money is yours anyway if you're a single member business owner. So just pay yourself. Instead of taking that business debit card or credit card and taking cash out the ATM or swiping the debit card at the nail salon or the barber shop or to get a pair of sneakers or what have you, write yourself a payroll. If the company made $600 this week and you need $550, pay yourself $550. Because here's what happens. It becomes a payroll expense, which is a business expense, and you take that same money and buy your sneakers and get your hair done and get your nails done and take the kids out or whatever it is that you want to do, pay a bill. But if you take the business account and swipe it at Foot Locker, that's not a business expense. So whatever you're spending personally out of your business account, you're losing the deduction. You're just throwing away money basically because you still technically need to claim all of that income as income because the expense is not a true expense. Keep a log of expenses detailing the business purpose. You can do this on an Excel spreadsheet if you don't, or if you don't have a bookkeeper or can't afford a bookkeeper at this time. Do the Excel spreadsheet, make notes, keep detailed records of what the business purpose is. So lots of times we want to write off things like fuel or meals or different levels of travel. You want to indicate what this meal was about. Who did you meet with? And what was this about? If you're traveling, what's the purpose of this business travel? Save your receipts as proof of the expense. And I suggest you calculate your profit and loss quarterly. What does that mean? That means look at how much income you've earned, how much expenses you've incurred, what's left over. Is it positive or negative? If it's positive, it's your profit. If it's negative, it's a loss. But the reason I suggest you do this quarterly, and now's the perfect time to start, is January, is because when you look at your stuff in March, you now have the opportunity to say, okay, wait a minute, what did I do in this first quarter of the year, January through March? So you're actually going to look at it in April when March ends. And you get to say, okay, what did I do from January to March? Am I getting the results that I'm interested in having? Are you making enough profit? Are you losing too much money? Even look at where's the money being spent. Because some people look at it like profit or loss, okay, I'm profitable, bet, I'm good. No, but even still, look at your expenses. Where are you spending your money? Are you spending your money in areas that make you more money? Can you shift some things around? I have some people, you might spend a ton of, let's just talk about advertising. There's several ways to advertise. You can boost on social media. You can hand out business cards. You can do flyers. You can, I've done radio and commercial here in North Carolina. What's earning me the money? Do I want to continue to pay for radio and commercial if most of my people are coming in just based on me handing out business cards or social media boosts? I want to look at these things so I can shift money around and maybe not spend so much in particular areas of expense. I tell the story all the time. I did a beautician's taxes down here in North Carolina. And the first year I did her taxes, she spent $50,000 eating out. That's a down payment on a house. But she never realized it because she's in the salon all day doing hair. She's ordering breakfast and lunch and dinner, and she's just splurging and, hanging out on the weekends and what have you. But $50,000 in a single year on eating out fast, that's a lot of money. So now she's cooking and stuff. So, because when she saw that number, she was passed out. Pay quarterly taxes on your profits. Now you can either pay your quarterly taxes outright, or you can set up a business savings account, calculate it, and just put the money to the side. So if you end up with a liability at the end of the year, at least you have been accruing for it throughout the course of the year. Now, how do you calculate this? So to break even, you would do your income. You would pay tax on, if you want to break even, you would pay taxes on your income minus expense, right? If you want to get a refund, which means you overpay, then you want to pay tax on your income alone. That can go a whole lot deeper. If anybody has specific questions or want to get into like the depths of the numbers, this is something that we should book a consultation and meet one-on-one about, because everybody's situation is going to be different. But again, paying taxes on profit will get you break even. Paying tax on income will put you in a position of profit. Now, bookkeeping software, if you can afford or want or interested in doing a software, if you don't want to do it manually, these are 3 that I've used in the past. I currently use Invoice Ninja. I have been using it. The fee, I think, went up to like $100 for the year if you pay it outright. And it works perfectly fine for me. Most of these softwares you can have, mine is powered through Stripe. So when I invoice people and they pay, it's powered through Stripe, goes directly to my bank account. You also have QuickBooks and you have FreshBooks, and there's tons of other softwares out there. These are just some examples. Most of these you can have linked to your bank accounts, and you just kind of have to go in and kind of program your categories. So this way, when your bank accounts upload each month, everything is categorized properly. But you can use the bookkeeping software if you cannot afford it or not interested in the bookkeeping software. Again, I have a spreadsheet that works perfectly fine. You have to do it manually, enter your information in, but it is not hard and it's not extremely time consuming if you keep up with it. Running reports. There are several reports a small business will need at their fingertips. These are the most important ones that you want to have. It's your profit and loss statement. This represents the company's income, expenses, and profit. That's your roll-up. When you look at this, this is giving you, you can have a detailed profit and loss statement or a concise one, but this is the one that's telling you exactly where you stand. This is your company's financial health in one document. A balance sheet reports a company's assets, liabilities, and shareholders' equity. It represents the state of a company's finances. So this balance sheet, the balance sheet is actually supposed to always literally balance. So your assets and your liabilities should always equal exactly the same on your balance sheet. Payroll reports will display wages paid to employees and payroll taxes paid. Again, I strongly suggest you pay yourself, pay anyone who's doing business for your company, even if they're not like a W-2 employee. If you can pay yourself W-2, that's ideal because you're paying taxes on the earnings that you're making throughout the year. You can remove that deficit at the end of the year. Be your own boss. And because you're your own boss, you can pay yourself whatever you want from week to week. So if it's a great week and you want to pay yourself $2,500 this week, pay yourself $2,500. If it's a not so great week and next week you're paying yourself $250 or $500, it's your business. You can pay yourself whatever you want. If someone else is doing business for you, if you are paying out for a service, at least $600 for the year, you should be issuing that person a 1099. And you get that 1099 should be issued to them. They claim it as income, and you are going to generate this as an expense. Payroll is generally one of the company's largest expenses. And guess what? Even if you don't have a payroll expense, I can almost bet my bottom dollar it's still your largest expense. You're just not calling it payroll. You're doing what I talked about earlier in this conversation, where you're taking the funds and you're doing what you want to do to live and survive off of it, because that's common for many small businesses and startup businesses. You're living off the earnings. And so it's still technically payroll, but again, you're losing the opportunity to write off that business expense by swiping your business card to do personal things. Okay, payroll services with More Money Matters. We offer payroll services. We process weekly, bi-weekly, or monthly. It is the customer's choice. We pay the employee and business taxes to the IRS and respective state. We issue 1099s and or W-2s at the end of each year. Now, what's important? As a business owner, you are responsible for taxes on the profits you earn. If you pay yourself a W-2 wage throughout the year, you are reducing your tax liability. Plus, personal expenses are not tax deductible. How do I suggest a business owner determines what their payroll should be? I say that you tally up all of your monthly expenses, your personal expenses, add some disposable income, like eating out, hair, nails, and shopping. Boom, that's your salary. That's where you should start paying yourself, because if your company's money is what is all you have anyway, because if you're being an entrepreneur, it's all you got, then you're gonna have to live and you're gonna have to pay personal expenses. And this is how you determine how to issue your payroll to yourself through your business. Now, what's the benefit? I've been saying this the entire call. Personal expenses are not tax deductible, but payroll is. So now you get to write off 100% of your salary, which is also 100% of your living expenses. These are the 2024 tax brackets. I wanted to point this out because this actually is important even if you still have a day job. So they increased the tax brackets this year from what was last year. And basically what this is saying to you is, let's look at the single taxpayer, because this is going to generally be single and or head of household people. So if you're earning $11,000 a year or less, you're in the 10th percentile of the tax. That's how you should be paying 10% of what you earn. If you're earning anywhere between $11,001 up to the 44,725, you're in the 12% tax bracket, and so on. How do you calculate this? Determine what your annual salary is and multiply it by 0.12 or 0.22. That'll tell you for the year how much taxes you should be paying. And so even if you have, I mean, you're doing this regardless. If you're a business, you're taking your business income and you're figuring out where you land here and you're multiplying it by point whatever the tax rate is. But again, if you're a W-2 employee and you still have a job, you want to do this as well so that you make sure that you're paying the proper amount of taxes. Remember, a refund is an overpayment in taxes or qualification of credits. So if you qualify for earned income credit, child tax credit, you have dependents under the age of 17, then you qualify for credits. If you're that single person that's earning funds and you don't have any dependents, you might qualify for earned income credit depending on where you are. And this is also important if you have a full-time job and you have your business, because your full-time job is taking out taxes according to the income rates that are here. But then when you go and add your business income to your tax return, you have an accountant. It may have changed your tax bracket. So you want to take your job income, your personal income, your business income, combine those incomes and figure out which tax bracket you want to be in. One of the things you can do to offset what you may end up owing at the end of the year is combine those salaries or those incomes and have your job take out a higher tax rate. Either way, it's accounting for what you're earning from the business and what your tax liability is. Quarterly taxes are due as you see here on the screen. If you're going to pay your quarterly taxes, or, if you're going to pay it directly out to the IRS in New York or whatever state you're in, Secretary of State, Department of Revenue, then you want to do it. It's going to be due on these dates. So the first quarter of the month runs between January and March. And if there's a tax liability, it's due by April 15th. Quarter two runs from April to May. And your quarter two liabilities, if there are any, are due June 15th. Quarter three, June through August, due September. And quarter four, September through December, due January 15th. Once again, you can calculate quarterly, put it into a savings account, and then if you decide to reconcile at the end of the year, maybe you won't owe as much, and then you can just pay what you actually do owe, and if there's something remaining, you have a surplus. As mentioned earlier in the presentation, you can file your quarterly taxes in one of two ways. Pay taxes on profit. You guys might want to take a picture, a screenshot of this. Pay taxes on profit to break even, or pay taxes on income to receive a refund. Some of the other things that you can do with your profits, I call it funneling profits. So if you don't want to have a huge tax liability at the end of the year, there's some things that you can do throughout the year or even as you approach the end of the year, just be sure that you do it before December 31st. You can start a nonprofit organization and donate from your profitable business to your nonprofit. Nonprofits are never taxed. So if you realize in November, October, somewhere around there, that you're gonna have a $50,000 profit margin and you don't want to be responsible for a tax liability of 50 grand, if you have a nonprofit organization, make a donation to your nonprofit organization. There's nothing that stops a nonprofit organization from investing and or, paying something out, paying, a salary. So maybe someone who sits on the board of the nonprofit organization is also the owner of the business. And so they get a salary from the nonprofit organization right back into the business. So these are ways to funnel profits. This is some of the things that rich people do and we're never taught. You can open up a Roth IRA, custodial IRA. This is for your minor dependents. Okay, you can open these and put funds away for your minor dependents. You can pay yourself a salary. It's a business expense. You can pay your minor dependents. This number has also changed because it says 15,905 in 2022. The standard deduction, I believe, in 2022 for head of household is like 19,000. You can pay your minor dependent, whatever your standard deduction is. If you're married and you file joint, the standard deduction is like 27,000. If you have multiple kids, you can pay each of them up to the maximum standard deduction. And it's not taxable. They don't have to file a tax return. They're tax exempt because they're a dependent, so they don't have to pay any federal or state tax. All they're responsible for is Social Security and Medicare. So a few things happen here. I mean, you can put it into a savings account. It's not even money that they have to have access to, but you pay it out as a payroll expense. Those funds are there available for you to access or for you to actually save. Again, they're tax exempt, so they never claim it as income. You still file your dependent on your tax return, and you've now put up $20,000, $30,000, $40,000 throughout the course of the year. My 15-year-old son has been on payroll since he was 8. So I have a savings account for him with Navy Federal, and I process his payroll and have it deposited directly into that account. I also have a custodial IRA in place for him because he's an employee. He can, save into a retirement account. So I just imagine like when he's an adult and if he decides to work or decides to be an entrepreneur, whatever his choice is, he's been investing in Social Security since he was 8 years old. And he's been investing into a retirement account for about that long as well. Again, these are all business expenses that can be written off, so it reduces your taxable income. And remember, if you're looking to build business credit, you do not want to funnel all of your profits, thereby making your company appear as a complete loss. This one is also super important because none of us want that tax liability that I'm talking about. We don't want to pay at the end of the year. We're in this to make money. So it's important for us to figure out some places to funnel our money and some investments and things to make. But what we don't want to do is have our company look like we have a complete loss every single year. Because who wants to loan money to the company that's always losing, that's never profitable? So as you guys start to look at business credit and applying for things, they want to see the company that's actually making and retaining some funds, not the company that's always losing. I'm going to stop the share. I know that was a lot of information to give you guys at one time, but I hope it was helpful. I hope you guys are able to grab some notes out of it. I'm open to taking any questions that anybody might have about any of what we covered.
Hi.
Hello.
Thank you so much for this information. I just had one question. So if you still have a 9 to 5, let's say, and you have your LLC, you said we have to claim taxes joint together. It's not going to be separate. It's not going to be like business and then personal.
So you don't have to pay together. What I was
Okay.
saying is, I'm just going to use some numbers here. If you earn $50,000 as a salary, and
Mhm.
then you're profitable, let's go another 25,000 in your business. Your income, if you're a single member LLC, is now 75,000. Your
Mhm.
job has only been taking taxes out on your $50,000 income.
Correct.
So there's one of two things you can do. You can either figure out and determine what the 25,000 tax liability is and handle it during tax season, pay it quarterly. Or if you can afford to do it, say, you know what, I know my income is about 75 grand. What tax bracket does that put me into? And then change your W-4 form at work and just let them take the taxes out there.
Oh, okay. All right, thank you.
You're very welcome.
I have a question.
Yes.
Okay, so if you are a sole proprietor, right? I know you're responsible for all debts, but if you're a sole proprietor, how do you pay yourself a salary? Like, I'm not really sure how that works. Like, are you even able to
So,
do that?
yeah, as a sole proprietor, you actually cannot pay yourself a salary. This would only qualify for LLCs and or SOC corps.
So I have an LLC, but does that, but I thought since I'm only one person, a single LLC person, doesn't that still fall under sole proprietor or is that different?
It doesn't fall under sole proprietor. You are in fact an LLC, and so as a limited liability corporation, you can still pay yourself a salary. So when you file your
Okay.
tax return, you'll have a W-2 if you're paying yourself a wage. And then if there's anything additional remaining, then that goes in as self-employment income for the business.
Okay, so the LLC is a completely different tax return. Like for your any business that has an LLC has to file separately than your personal.
No, single member LLC is filed on your personal tax return. If it's a partnership LLC, then it's a separate tax return.
Okay, thank you.
You're very welcome.
Will you be providing your contact information?
I absolutely can. Let me go ahead and put it in the chat. I probably have, it's probably my next slide and I turned it off too soon. Let me provide my contact information here.
You say what?
And the More Money Matters Inc. If I can spell tonight, the More Money Matters Inc. That's my Facebook and Instagram. And our website is moneymatters.org. And I'll give you guys my cell number, or I'll give you my email address. And I'll also give you my cell number. I just suggest you guys text me first. Just to make sure I have time to pick up the phone and talk, or we can schedule some time to talk if you guys want to speak to me. But yeah, that's all of our contact information. So More Money Matters Inc. on Facebook and Instagram. www.moremoneymatters.org is our website. And rlily@moremoneymatters.org is my email address.
Hi, I have a question.
Yes.
So I know you were talking about the non-for-profit, setting up an additional business, a non-for-profit business. So say if your tax bill, the IRS comes back and say, hey, you owe $7,000. How much do I know to make a donation to my non-for-profit to, get rid of that owing so much in taxes?
So this is where the calculating your tax liability quarterly comes in. So if you're looking at your income minus expenses, whatever that dollar amount is, if it's positive, that's what you have to calculate tax on.
Okay.
And if you're doing that quarterly, by the time you get to the fourth quarter of the year, you have an idea of approximately where you're gonna land. And that's how you begin to determine. Terrell, can you please mute your line, please?
Sorry.
That's okay. So yeah, calculating that quarterly tax amount is what's gonna help you understand where you're gonna be at the end of the year. And so that's the number that you use to funnel into your nonprofit.
Okay. Have you dealt with any like Airbnb hosts? Have you did any tax how is that process?
So I actually have a few Airbnbs, and I also do returns for Rel and Yvonne and several others. And so the way that works is when you ask, be a little bit more detailed about your question. What do you mean?
So, okay. So say I'm paying like my clients, say if I pay someone to come set up my Airbnb, right?
Mhm.
If I'm paying them, like say if I'm paying them through Zelle, is that still a business expense write-off, or do I have to actually like write them a check? Does it matter as long as it's out of my business account?
So the short answer is yes, it is a business expense. The professional answer I would suggest is that, again, when you're hiring someone to do a job for you that's gonna cost you more than $600, then you should be collecting their information so that you can issue them a 1099.
Okay.
That's ideally what you should be doing. But if they, for whatever reason, they don't want to give you the information, or the year is over now and you failed to do it in 2023, yes, the short answer is it is still a business expense. I just hope that your Zelle transactions indicate what the transaction was for.
Mm,
You
okay.
know what I mean?
So
Like in that
you're
note
saying like,
section.
yeah, in the memo section?
Yes. Yes.
Okay. Okay. And like on average, how much have you seen? I know it's kind of a hard question depending on the profit from the Airbnb. Like how much taxes usually do your clients pay out for their Airbnb
So it really varies
or
because how much they're gonna pay out, it depends on the individual situation. How much did they earn? How much
right?
did they spend? Do they have any dependents? Were they profitable? Did they, were they at a loss? All those things play a factor. And even I mean, I've had situations where I can do two exact clients. I can even go on a different level, W-2s. They can earn the exact same dollar amount. Did they pay the same amount of taxes throughout the year? Even if they both have one dependent, are their dependents the same age? Is one of them older than the other? Because again, even with just child tax credit, if I have a client who has a 6-year-old kid, what they're gonna get for child tax credit is gonna be different than what the client with a 15-year-old child is gonna get. The child tax credit value is different for those two
Right.
age groups. So, those are just little factors that, determine the differences.
Okay. Thank you.
You're very welcome. Anybody else have any other questions?
Hey Raisha, how are you?
Hey, who's this?
Sorry. Oh, well, Carmen and then Lanier. Sorry.
Oh, hey,
Okay,
Carmen,
no
hello,
problem.
Lanier.
Sorry. Raisha, going back to the payroll expenses, the way I've been paying myself throughout the year, I actually just been transferring, a transaction from my business account to my personal when I need anything and marking it as a owner's withdrawal. Now,
So
I
here's,
wouldn't be able to do a payroll expense with that, or it wouldn't be tax deductible, correct?
so here's the thing. So doing the owner draw does document what the transfer was for. So it is good that you're doing something. That's better than swiping the business card. Here's the caveat though. Although you write it off as a business expense, you gave it to yourself, you still haven't paid any tax on those funds.
Right,
So you've almost just washed from one account to the other.
right.
Whereas if you actually run yourself a payroll, if you run, consider yourself a salaried or W-2 employee from your company, you're paying tax on the funds that you're transferring yourself throughout the course of the year.
Okay. Now, because I transfer money to my personal, do my business has to issue a 1099 to myself for those amounts?
Are you a single member LLC?
Yes.
You could, so you can do it because you're a single member LLC, you can do it both ways. You could issue a 1099 to yourself from your business, or you can just capture it as an owner draw on your income statements and on your tax return.
Okay, no problem. Thank you.
You're very welcome. Lanier?
Thank you, newbie here. I am eager to get started, and I know that I want to do a substantial amount with business credit, but I also know that I need to use my money to get started. So how is it balancing me having my own money to start and then transitioning over? How do you manage that?
So you still open the business bank account, and the deposit that you put into the account initially, or if you have to do it over a period of time, you're gonna do an owner investment. Is what it's called. It's an owner investment. So you wanna make sure that it's captured. The most important thing about running a business is how your stuff is streamlined and documented. Everything just needs to be clean and concise. So any funds that you have to put into the business account in order to operate. So even for me, like when I started my first Airbnb, I clearly took personal money out of my savings account. It was an owner investment into my business account. And any funds I had to deposit until, I was receiving a profit, it was an owner investment. And here's the great thing about that is when you do that owner investment, let's just say your owner investment turns out to be about $5,000. When the business becomes profitable, you can then take out that owner draw or owner repayment, because you have the right to pull back your investment from your business. And it's not income when you do that. So you don't have to write that off on your taxes or anything like that. If you're
That was
pulling
gonna
out
be
your
my next
investment,
question.
yeah, if
Thank
you're
you.
pulling back your investment, it's not income, it's not earnings. So you don't have to claim it as income. You just write it back to yourself, you know, cut a check to yourself, or, you know, do a transfer and document the transfer as a owner draw or an owner payout. Investment payout, I would say owner investment payout. Kind of like repaying a loan back to yourself. Does anybody else have any questions for me?
Did you ever put your information in the chat?
I did, I put it twice. Do you not see it? I'll copy it down one more time. Just put it up there again. So yeah, if nobody else has any questions for me tonight, you guys all have, you ladies and gentlemen, all have my contact information. Feel
I
free to
think
reach out
that
to-
you may be sending something to a private message rather than to everyone, because I don't see it either.
Oh, you don't see it? Okay, let me see.
Yeah, same here.
Okay, let me try this. Let's see something here. Okay, chat.
Make sure your message is to, it says everyone.
Okay. Well, can you put it in there? Do you see it in any other chat?
No, it's because like if you when you go to send, if somebody was like writing to you, their name will show.
Ah,
You just gotta make sure you click it and then go to the top and hit everyone.
okay, let me see. Oh, I see what you're saying. Okay, everyone in the meeting. Got it. All right. I'm sorry, y'all be technologically retarded sometimes. I think now it's in everyone, because yeah, I see what was happening, it was going, replying to certain people. Okay. Can everybody see it now?
Yeah.
Okay, perfect. Yes, if you guys have any questions, I don't want to hold you any longer. We are after 9 o'clock. Feel free to hit me up, give me a buzz, shoot me a text, email me. Anybody need that profit and loss? Well, the spreadsheet that ultimately turns into a profit and loss statement, email me and you can put in a subject line, please send spreadsheet, and I will copy it and forward it right back to you. Most likely be tomorrow, but if you go ahead and shoot me an email, I'll get that over to you. All right. All right, well, if that's it, I wish everybody a great evening and a prosperous new year. I'm on every Monday at 8 o'clock. So I try to bring you guys something new, something different, and something informative. So everybody have a great evening.
Every just to make sure y'all know, every second Monday. She ain't gonna be on every Monday.
Oh, did I say every
of the
Monday?
month.
Yes, every second Monday.
They're gonna be like, we thought Raisha was here. No. Every second Monday.
Sorry.
Oh, y'all, second Monday. All right. Have a great night. Thank you, Ra.
All right, you're
Thank
welcome. Have a
you.
good night.
Thank you.